Hello, welcome to CMC Markets on Tuesday the 10th of September and the weekly market update. Now to begin with, I'm actually going to sort of look back at something that I covered last week, and that was specifically the Japanese yen and the Nikkei, or the Nikkei 225. Now I talked about these triangle breakouts, and we got a breakout on the dollar yen, but we didn't get a breakout on the Nikkei. And I also talked about the double bottom on the Aussie yen. We've pretty much met our objective on the Aussie yen due to the Australian elections at the weekend, and much better than expected Japanese data on Monday morning. Now, what that Japanese data has done is we've also got a breakout on the Nikkei 225 as well. So if you actually look at the dollar yen chart, which I'm showing you right now, we've seen quite a bit of volatility on Friday on the dollar yen chart. We had a very disappointing US payrolls number, which prompted a sharp drop in dollar yen, but we didn't actually take out Orichinmoku's support around about the 98.40.50 level. So that keeps the triangle breakout intact. We also at the same time got a breakout in the Nikkei 225. And that suggests that given the fact that we've got a breakout on both, and also because both are very, very closely correlated, it keeps the prospect of a significant move higher in dollar yen and the Nikkei 225 very much on the table. So as long as dollar yen can break above the 140.50 level, we can then start thinking about looking at the 103.75 highs that we saw earlier this year, and then on potentially a move to 108. Similar sort of moves should play out in the Nikkei. We could well get a move to 17,000 if the two continue to correlate. Now, what could undermine that scenario? Well, any number of factors, notwithstanding the fact that US bond yields could start to slide back. Now, one of the things about last week's payrolls data was that they were very disappointing, particularly the downward revision to the July numbers to 104, which was the worst number since June last year. So really the consequence now is whether or not the Fed will taper in a week's time. And that really is the big unknown. Will they taper by 5 or 10 billion? I will cover that more in next week's video. But for the here and now, the dollar yen upside still remains intact, as does the Nikkei, while those triangles remain intact, or the breakouts remain intact. So let's move on to the UK 100. Now, we've seen some very positive Chinese economic data, not only over the weekend, but also early this morning, particularly the industrial production number, which came in at a 17-month high at 10.4%. Now, I know what you're going to say. You're going to say that Chinese official data cannot be trusted, but irrespective of whether or not you believe the numbers and you believe that the export numbers were very good, whether you believe the retail sales number, the fact of the matter is markets are going higher as a result. So you have to trade in the direction of the move. And if we look at this UK 100 chart, we can see that we're looking to test the upper bound of the trend line from the highs this year. And that resistance line is around about 6,600. If you also factor in an easing of the Syria tension that we're seeing play out in the Middle East because of this Russian offer to basically put all Syria's chemical weapons to basically get rid of them, get rid of them. That's pushed oil down, and it's making investors more optimistic about stocks going forward. So the FTSE 100 looks as if we could break up towards the 6,600 level to that trend line resistance from the highs that we saw earlier this year. Now, I was torn a little bit between whether to cover cable here or whether to cover Apple. So I'll try and do both, but there is no cable chart. At the moment, we've got the pound against the dollar approaching a very significant resistance level at 157.50, 200-week, 100-week moving average. Depending on tomorrow's unemployment data, and there's a good chance we could see a fall from 7.8 to maybe 7.7 or 7.6, the prospects for a higher pound remain quite high at the moment. So definitely keep an eye on that 157.5 area. Moving on, let's have a look at Apple, because Apple is particularly interesting at this point. Apple today making an announcement on a new iPhone, or an upgrade to the iPhone. Now, there's any number of announcements they could make at this press conference tonight. By the time you see this video, the news will probably already be out there. But for the here and now, I've been fairly bullish on Apple. since it was around about $430, simply because of this double bottom that we played out on the daily chart down here. We haven't as yet met our target for that double bottom. That target is $540. Now, currently as I speak, we're trading just below 510, around about 508. We have had a pullback to 485. I suggested that that would probably be an acceptable pullback. We could pull back as low as 475, but as long as we stay above 475, then the potential for a move higher in Apple's share price towards the longer term target 540 remains very much on the table. If we then look at a weekly chart, and the weekly chart I'm just putting on the screen right now, there is what looks like a flag on the weekly chart. We have a strong up move, a sideways consolidation. If we get a significant up move this week, that should play out our flag, and as such we should get the move to 540, 550. So keep an eye on Apple today and over the course of the week, because we could well see a move higher if the market likes what Apple has to say today at its press conference. Okay, so that's pretty much it for this week. Once again, thanks very much for listening. This is Michael Hewson talking to you from CMC Markets.